Stop throwing away $10 a week on coffee and energy drinks. What if I told you that same 10 bucks could turn into over half a million dollars without you lifting a finger? Most people have no idea this is even possible, and the financial industry definitely doesn't want you finding out how simple it really is. Right now, you're about to discover something that could completely change your financial future, and it starts with less money than you spend on lunch. What happens when you invest just $10 every single week into an S&P 500 ETF might shock you. And by the end of this video, you'll know exactly why wealthy people have been quietly doing this for decades while everyone else stays broke. Let me show you the math that nobody talks about. The S&P 500 is basically a collection of the 500 largest companies in America. We're talking about Apple, Microsoft, Amazon, Google, and every other major corporation you interact with daily. When you buy an S&P 500 ETF, you're essentially buying a tiny piece of all these companies at once. Now, here's where it gets interesting. You don't need thousands of dollars to start. You don't need to be a financial expert. You literally just need $10 and a brokerage account, which you can open on your phone in about 5 minutes. But here's the problem most people face. They think investing is complicated, risky, or only for rich people. They see the stock market on the news, watch it go up and down, and think it's basically gambling. That fear keeps them poor. Meanwhile, people who understand what I'm about to tell you are quietly building wealthy in the background. So let's break down what actually happens when you invest $10 every week. First, understand that $10 weekly equals roughly $40 per month or $480 per year. That doesn't sound like much, right? Most people spend more than that on streaming services they barely use. But here's where the magic happens, and this is what separates people who build wealth from people who stay stuck. The S&P 500 has historically returned about 10% per year on average over the long term. Some years it's up 20%, some years it's down 10%, but over time it averages around 10% annually. This is crucial to understand because we're not trying to get rich quick. We're using time and consistency to build serious wealth. Now let's run the actual numbers, and this is where your brain might explode a little bit. If you invest $10 every week for 30 years, and that money grows at 10% annually, you'll end up with approximately $90,000. Not bad for what amounts to pocket change, right? But wait, it gets better. If you do this for 40 years instead of 30, that number jumps to over $170,000. And if you start young enough and do this for 50 years, you're looking at over $350,000. But here's the part that really matters. Let's say you can bump that up to just $20 per week. That's still less than $3 per day. Over 40 years at 10% average returns, that $20 weekly turns into approximately $340,000. Double it to $40 per week, which is less than $6 per day, and you're looking at nearly $700,000 after 40 years. This is the power of compound interest that Albert Einstein allegedly called the eighth wonder of the world. Your money makes money, and then that money makes more money, and it snowballs. Early on, you won't notice much happening. Your account might have a few $100s after a year or two. This is where most people quit. They don't see immediate results, so they think it's not working. But after 10 years, you start seeing real momentum. After 20 years, the growth becomes dramatic. After 30 or 40 years, the numbers become life-changing. Here's another critical advantage nobody mentions. When you invest weekly, you're using something called dollar cost averaging. This means you're buying when prices are high and when prices are low. When the market drops and everyone panics, your $10 buys more shares. When the market rises, your $10 buys fewer shares, but they're worth more. Over time, this smooths out your average cost and reduces risk. You're not trying to time the market, which even professionals can't do consistently. You're just showing up every single week like clockwork. Now, let's address the elephant in the room. What about risk? Yes, the stock market goes up and down. Yes, there will be years when your account loses value. In 2008, the market crashed. In 2020, it dropped 30% in a month. But here's what history shows us. Every single time the market has crashed, it has eventually recovered and gone on to reach new highs. If you kept investing through those crashes, you actually made more money because you bought shares when they were cheap. The only people who lost money were the ones who panicked and sold everything. This strategy requires patience and discipline. You need to commit to investing every single week, regardless of what the market does. Set it up automatically so you don't even think about it. $10 gets transferred from your bank account to your brokerage account and buys your ETF shares every week without you touching anything. Most brokerage apps let you automate this entire process. You set it once and forget it. Then you just let time do the heavy lifting. The hardest part isn't the investing itself, it's resisting the urge to stop when things get boring or scary. It's ignoring the noise from social media about the next hot stock or cryptocurrency. It's staying consistent when your friends are spending money on things that lose value while you're buying assets that gain value. Here's something else to consider. As your income grows over time, you can increase your weekly investment. Start with $10 now. In a few years, maybe you can do 20. Eventually, perhaps 50 or $100 per week. The earlier you start and the more consistent you remain, the more dramatic your results become. This isn't about getting rich overnight. This is about building real, lasting wealth using a proven strategy that actually works. The S&P 500 has been around for decades, and despite crashes, recessions, and chaos, it has consistently trended upward over time. You're betting on the long-term success of American business, which has been a winning bet for over a century. So here's what you need to do right now. Open a brokerage account if you don't have one already. Look for platforms with zero commission fees. Search for an S&P 500 ETF. The most popular ones have ticker symbols like SPY, VEO, or IVV. Set up automatic weekly investments of whatever amount you can afford, even if it's just $10. Then commit to never stopping. Let the market do its thing while you focus on living your life. Check your account maybe once a quarter, but don't obsess over daily movements. In 10, 20, or 30 years, you'll look back and realize that this simple decision changed everything. If you want more strategies like this that actually build wealth instead of just sounding good, follow for more content that cuts through the nonsense and gives you real, actionable information. Your future self will thank you for starting today.